I'm Greg Hunter. Welcome to USAWatchdog.com. With us, my next guest is one of the world's premier trends forecasters, trends researchers. Before I bring him on, I just wanted to bring on, this is what we're talking about. Just this past week, Janet Yellen, former Fed head, says it's time for alarm, her quote, alarm, as loan bubble runs amok. Another quote just happened on Friday. This is with the IMF. Claudio Borio at the IMF, world economy about to get very sick. Lots of warnings coming out. This is just two from last week. A guy who, in the pre-interview when I booked, didn't know anything about these people that just warned about this, but he has his own warning about the an economic 9/11 about ready to happen. I'm talking about the great Gerald Celente. Gerald Celente, thanks for joining us today on USAWatchdog.com. You are the publisher of the Trends Journal.
Well, thank you so much for having me on. And as you well know, we sent out a trend alert a few weeks ago, and we called it Economic 9/11.
That's right.
Guns, gold, and a getaway plan. And we believe that there is setting up now for a market crash that will be the worst in modern American history. And the fundamentals of that are what Janet Yellen said, the loan bubble. There's $250 trillion worth of debt out there. So let's put this together, Greg. What did the Federal Reserve do last week? They raised interest rates. Now we're looking at the Fed fund rate back to April 2008 levels. What's going on in the emerging markets? Well, as those interest rates go up in the States, you're seeing currencies crashing, hitting new lows like Argentina, Turkey, India. Same time, what's going on? Go to the end of last week. What did you see Brent crude oil at? Oh, it's back to 2014 levels, over $82 a barrel. Oh, and things are heating up over there in the Middle East, aren't they? What's going to happen if it hits $100 a barrel? Take a trip out to California. You're seeing $4 a gallon. Take a look at wages. They're not keeping up with inflation. Actually, they're not even near it when you put the real inflation numbers in it. Let's go back to the debt bubble. I mentioned what's going on with the emerging market currencies. You have interest rates in Argentina at 60%.
Gerald, I think they just went to 65.
65.
I think they just went to 65. I think they're having to raise jack rates up like crazy to protect their peso. Go ahead. I'm sorry. Go ahead.
And no, I didn't know that because they also, the IMF, the International Mafia Federation, they're loaning them now, it was $50 billion, now it's $57 billion. So, austerity measures, Turkey, one country after another, there is some $63 trillion worth of emerging market debt that was taken when the dollar was low. Now their currencies are going down. They have all that debt to pay. They have to pay it in dollars. Oh, let's go back to oil. Let's make globalnomic connections here. I mentioned India. 80% of India's energy is imported. What is oil based on? Petrodollars. The rupee's now at an all-time low against the dollar. Let's take a trip to China, the world's largest importer of energy. Look what's going on with the yuan. They don't want it to go down. They have to pay for that in dollars. It's petrodollars. Regardless of all the talk that you're hearing about how, oh, there's going to be new currencies to challenge the dollar, that's far away. You're looking at the yuan being, it's only about 2% of global trade. It's nothing. So what we're saying is, as interest rates go up, as Janet Yellen said, the loan bubble, they're the ones that created it. It's the greatest Ponzi scheme in world history. They didn't teach you quantitative easing, zero negative interest rates in Economics 101 or in graduate school. The bubble is about to burst.
You know, we actually, according to the Fed, according to their numbers, because their numbers are bizarre, but I usually like to look at John Williams. I know you do too at shadowstats.com. But you know, the Fed funds rate is what they always make it between two. You know, it's around a little more than 2%, between 2.25%. And if you look at the Fed's own inflation numbers, it's around 2%. So we effectively have 0% interest rates, according to the Fed's numbers.
According to the Fed's,
it's
when
a
you
wash.
take shadow stats, it's a lot worse.
Yeah, it's close to 10%, according to John Williams. 10%.
Yes.
When you're saying that the wages are going up, and when you factor in a real, true inflation rate, like John Williams, not the cost of survival, but the cost of living, that people are losing. That there is
Of course.
which is why the Fed is raising their They know the real numbers, don't they? I mean, doesn't the Fed know the real numbers? Don't they know this ain't 2%? We know it's closer to this dude John Williams over at shadowstats.com. They probably have a subscription to his site.
Yeah.
So
And again, you look at the real life of everyday people, your insurance bills, your taxes, school taxes, property taxes, federal taxes. I mean, we're not even near keeping up wages with true inflation. They don't factor those things in. So what we're looking at, Greg, here, the numbers are here. This is what people should be concerned about. But again, let's just, sex sells. So when you go back last week, everybody's riveted to what Kavanaugh did back in high school. But
or didn't do.
Or didn't do. And by the way, I mean, who lived a perfect life? I mean, you go back, only speaking for myself, Madon, the stuff that I pulled off as a young kid, and even as a young adult, I mean, you grow up, you do stuff. I'm not saying, it's proper to do abusive things, but I'm just saying the stupid crap that I pulled in my life. Anyway, what they're not hearing, corporate insiders are dumping stock in their companies at a rate not seen, you ready for this? In 10 years. With September not over, stock sales by company executives reached 5.7 billion, according to data from Trim Tabs Investment, the highest September in a decade. August's 10.3 billion in insider sales also reached a 10-year record. 10-year record? What was 10 years? Oh, wasn't that the panic of '08?
Which you called.
Which I actually not only called.
You did call it.
I took the domain name out in 2007.
It's in writing. It's in your trends research. It's clearly it's there. It's clearly in your records. I mean, I know it. I know you did.
And so what we're saying is, look at this data. This is from the Financial Times on Thursday, September 27th. Relative performance of S&P 500 versus the rest of the world is now at its most extreme level since 1970. On book value, the S&P 500 now trades at historic 2 times premium versus the rest of the world. Then you're hearing warnings. The divergence is now so stark that this month analysts at JP Morgan, Societe Generale, and Morgan Stanley have all recommended investors to start paring back their U.S. exposure. And what are you going to do? Go into the emerging markets that are submerging? No, Greg, when you put this all together, the Ponzi scheme is coming to an end. As the United States raises interest rates, look at the facts again. We got them right here. You're looking also at pending home sales fall in August to the slowest pace since the start of the year.
Well, now the mortgage rate's at what? It's approaching 5% for 30-year mortgage.
Exactly.
Which is still historically cheap.
which is historically cheap, but when you're not making any money, it's historically high. And that's why you're seeing some 32% of millennials still living with mommy and daddy because they can't even afford to rent an apartment, let alone buy a house. And now let's look at the facts. Look at the numbers of states where home sales are not only declining, but also they're lowering the home sale prices. We're at go take a walk in New York. There's like 20% vacancies in the retail sector, even on Madison Avenue, one place after another, for rent, for rent, for rent, for rent.
How bad? Well, listen, before we go to there, I'm thinking all this inflation in stocks, bond markets way overvalued because rates are going up. Who's buying this junk with rates going up? Food's going up, everything's going up. Not gold and silver. Silver's in the 70s this last week, and gold's in the around, $1,200. No movement there. No warnings there in gold and silver in the precious metals market. Of course, we know that it's all rigged. What do you think about gold and silver? What do you think about what they're doing to it? I mean, they're making it look like everything's fine here. No worries. We're not moving.
Well, as you know, I've been on your show many times. And
yes.
It's for years. The last few years, I've been saying the bottom of gold is around 1,200, and gold has to go over 1,450 to gain strength. Gold is weak because the dollar's strong. It's as simple as that. And then you're going back to the emerging markets. You take India and China. People can't afford to buy it because their currencies are going down, and so too are their economies. The Chinese economy is ready to explode. They're doing everything they can to pump it up. You're looking at debt to GDP ratios of over 300. You're looking at Chinese debt from when Clinton allowed them to come into the World Trade Organization. And in the 90s, it was about 500 billion about 30 years ago, actually. Now they have over $30 trillion worth of debt. So what I'm saying is gold is the ultimate safe haven. The markets are we believe they're going to collapse. When they do, that's when you're going to see gold prices spike. And again, gold is a safe haven commodity. If you're a trader, it's a different deal. If you're someone that wants to secure your future, then, and again, I'm not giving financial advice, we do not give that. We're saying gold right now, if you want to buy it and you believe in it, we believe it's at the bottom. So the risk level is very low, maybe another $30 at the worst. Again, there's a reason for this.
Go ahead.
It cost about $1,200 to pull it out of the ground.
That's right. That's what David Morgan, precious metal expert, said this exact same thing. I know you don't know him. You didn't. Maybe you heard my interview. I don't know. But he says the same thing about silver. What do you think about silver? I think silver is a screaming any metric. I mean, what is it, 80 to 1 or something crazy? 80 ounces of silver to make an ounce of gold. It's off the charts. It's way up there.
So when gold goes up, silver moves with it. But gold is the mover. Gold is the indicator that's going to pull everything up. But again, right now we're going through that deflationary period of commodities, except oil. The world cannot afford higher oil prices, period, paragraph. And if the explosion happens in the Middle East, you're going to see oil go over $100 a barrel. And again, I want to make this very clear. Everybody that listens to your show, these are people that have an understanding of the fundamentals. Go back, Greg, to the last 5 recessions. What were they preceded by? Higher oil prices. When the higher oil prices kick in, the recession kicks in, the markets go down, gold prices go up. And it's important also to understand that they're doing everything they can to prop the markets up. It's only going to work for so long, because here is the other fact of the markets. We're going to see over $1 trillion worth of stock buybacks this year. It's already over 800 billion, and we're only in September. So, when the slowdown in stock buyback starts happening, when the slowdown happens in retail sales because people can't afford to spend money that they're putting in their gas tank and heating up their houses in the winter, that's when you're going to start seeing the reversal of the markets, big time.
Carl Denninger, who I haven't had on for a while, I should have him on. Smart guy, Carl Denninger. He said that, the markets never get to the wall. You know that, right? He says in 2008, we probably could have had the housing crisis going on a couple of years, but somebody woke up one morning and said, oops, I'm out. And he said, so we don't have to hit the wall. We just need somebody on Wall Street to wake up and say, oops, I believe what Gerald Celente and everybody else has been warning is saying, I'm out. I mean, could this happen? Is October looking like this? I mean, you've never come out like this and said, well, you have just before 08, the crash in 08. But, it's been a long time since you've come out and said, this thing's going to blow up. Are you talking about soon? What's the timeline?
The timeline's tough, but he's 100% correct. All you need is one major failure or one of the major hedge funds pulling out, because that's who's running the show. You look at how the number of stocks have declined in the number of companies that are now in the market. Look at the big hedge funds, the private equity groups that are running this, and look at their debt level. Again, it does not take a genius to figure this out. If you have $250 trillion worth of debt and interest rates are going up and it's costing you more to borrow as you're making less, what is going to happen? It's going to collapse. All of these merger and acquisition activity, again, stock buybacks, M&A activity at all-time highs. As interest rates are going up, you got to pay more on your debt, and your debt is ballooning. Of course it's going to crash. It's a Ponzi scheme. We didn't have any recovery. Again, you know the numbers.
Yeah, John Williams said it was bottom bouncing. Although, I got to tell you, we'd be in a full-blown depression. I've said this many times. If it wasn't for Trump, he was a game changer. He pulled in capital. He is trying to get America braced for impact. That's what I think he's doing. He's rearranging these trade deals, getting us out of this stupid Paris Climate Accord and, the Iran fraud of, the nuke deal. And anyway, but just to your point, how bad is this going to be? We had 100, because according to Nomi Prince and other people, 160 to 70 trillion in global debt. Now it's close to your number. I mean, it's right at $250 trillion now globally of debt. So we exploded the debt in the last 10 years. How bad, as a trends forecaster, do you see this getting for the man on the street?
It's going to be terrible. And let's take a global look. Look at the migrant crisis going on. People flooding out of countries to find a job someplace. Look at South Africa. We're talking about gold. I mean, they're in a recession. Take a trip around the world. Where do you I was talking about Argentina. Let's go to Honduras. Hey, how about Nicaragua? Well, let's go up to Venezuela. Let's take a trip through Africa. Look, Indonesia. They're doing wonderful right now, aren't they? Look at their rupiah. It's one country after another. Look at the numbers, the lousy, rotten numbers coming out of the Eurozone. They're hardly growing at all. And what did they say? We're not going to raise interest rates maybe until the summer of 2019. And then you have the Fed saying, well, we're going to raise interest rates again in December and 3 or more times in 2019. So now you have the dollar way up here, not because it's so strong, because interest rates are higher, the dollar gets stronger, and all of these other currencies are declining. So they have built the perfect storm.
Ah, the perfect storm. That's a good one. The perfect storm, the perfect financial storm. Did they know they were doing this? Do you think they know they were doing this, or are they just so self-interested and so obsessed that they just don't care?
By their deeds you shall know them. Go back and listen to the stupid quotes from every one of these arrogant little people, the banksters, before the Panic of '08. Listen to Bernanke BS. Well, there's not going to be a national real estate problem.
Yeah, that's right.
Right?
I got fired from CNN for that. You know that, right?
One after another. One after another. They get it wrong all the time.
They did. They got it totally wrong. You got it right. People were mocking you, actually. The economy was so strong. You and Peter Schiff were being mocked. And I'm like,
that's right.
I don't know about that. I was working at CNN at the time. I thought, I don't know. Their story sounds, legit to me. I mean, everybody else sounds goofy. I mean, I was having arguments with Ali Velshi in the hall saying, they say it's going to be contained, but my sources say it's not. I mean, you're one of them. And it wasn't. It blew up. And you think it's going to be worse this time in America?
It's going to be It's going to be worse than the Great Depression. When this thing crashes, it's gone. Look what's going on in this country. Travel around. Everybody's locked in their little stupid media bubble over here. Why don't they talk about this on CNBC and all of the rest? Because it's bad for business. All they want to do is keep jacking up the equity markets. And here's the reality. 90% of the stocks are owned by 10% of the people. The rest of it in pensions and everything, it amounts to nothing. On average, that other 10% owned by we the little people comes up to less than $15,000 per family at the very top of it. But the 90% owns almost $400,000 worth of equities. When this top collapses, it's going to be the shock heard round the world because you're already, but again, we won't look at it. Hey, did you hear about Stormy Daniels? Oh, yeah, we won't talk about what's going on in the emerging markets. People don't even know what that means. So those are the facts out there. Currencies are crashing around the world. Name the country, look at the facts, and then say, okay, how is this going to get better? By pumping more cheap dough into it? What do they still have negative interest rates in Europe? They still have negative interest rates in Japan. Who ever heard of negative interest rates? And you're seeing what the Bank of China is doing to shovel more money into there to keep that alive because their investment, infrastructure, overall investment in China, it's at 1992 lows.
Wow.
That's how bad it is.
Are they going to have to just default on this debt? I mean, everybody's, Manarino said, everybody thinks it's so easy to default on the bonds. Well, you default on your bonds, you default on Euro bonds, you default on the euro. You default on U.S. treasuries, and you default on the dollar. You destroy your currency. I've had Jay Janda on, and he seems to think we're going to have a giant economic reset. I don't see how the reset happens without major defaults, without, hey, we're never paying this back. We know we're not. We're going to tell you now we're not going to pay it back. And then we're going to start over. I mean, aren't they going to, this is going to be painful to unwind all this debt?
No, what they'll do is they'll do what they always do. They'll throw the debt on we the people. They call it austerity measures. I call it raping the people of every penny that they have. Go to the country. Let's go. Talk about Argentina. Take a look at Greece. You don't have to go very far back to look at that one. I'll tell you what we're going to do. We're going to borrow money from the International Mafia Federation, and then we're going to have, quote, austerity measures. We're going to rob you of your pensions, your benefits, your retirement age. We're going to increase till after you die so you don't get a penny. Oh, and by the way, you're earning less, you got less. We're going to raise your taxes because we got to bail out the banksters. And what's happened since the crash of the panic of '08? The banksters have gotten much bigger. So and the gentleman that said it's only going to take one is 100% correct.
Yeah. Carl
Because
Dennis.
when one is in trouble, boom, they all go down because the Ponzi scheme is then unveiled.
Is there going to be civil unrest? Civil unrest. I mean, what's going on? They're screaming at Ted Cruz to get out of there. They're chasing Sarah Sanders. I mean, the Antifa, Black Lives Don't Matter. At least they don't matter in Chicago. I'm being funny. Black Lives do matter, but their group is bizarre. But we're setting up for some sort of civil war or some sort of civil discord or violence. I mean, where are we going with this, Gerald?
Well, it's in front of everybody's eyes. It's just going to escalate. When people lose everything and they have nothing left to lose, they lose it. And they lose it in different ways. You're seeing the suicide rate now at all-time highs and escalating, one of the major causes of death in America. You have the opioid crisis escalating at levels far beyond what anyone could have imagined. That's on one level, when you lose it. And then there's the other avenue of losing it. People angry at the bureaucrats and the politicians that have stolen their money and given it to their friends so they could get better deals and make more, as you're making nothing. So that's what we're going to see. Again, when people lose everything and they have nothing left to lose, they lose it. And that's why we're saying this is going to be an economic 9/11. Guns, gold, and a getaway plan.
And you're liking the gold component with this, right? I mean, and silver. I mean, a lot of people are going to say, "I wish you would talk about silver." So I'm just going to ask you, talk about. Okay.
I don't know enough about silver to talk about it. I've been buying gold since 1978. So I've been, but what I do know, as goes gold, so goes silver. So when gold goes up, silver's just going to automatically push up with it. I don't think silver is going to be the lead in the terms of it may go up faster than gold, but I don't know. But it's going to be gold prices. When they go up, that's when you're going to see the reality, the understanding of how bad things are. Then you see the other, you'll see silver move up with it.
And so you're saying some scenario like, and I want to put words in your mouth, but some scenario like, wow, you just seen gold make a tremendous move in the last month, 2 months, 3 months, whatever, from around 1,200 to 1,500. Now that's your mark, around 1,500, and it's sticking and it's going higher. Then all of a sudden people say, wow, gold's too expensive. I'm going to buy silver. Is that what you're saying? Silver will drag it up and catapult it past?
Exactly. And then that's going to happen all the way up, by the way. As gold moves up, silver's going to keep moving up with it. And again, our number is 1450. When gold stabilizes over 1450, I've been saying this now over 5 years, it's going to spike to the 2000 mark. There's going to be a spike when it hits past that. It won't be a gradual increase. It's going to be the same thing that happened when you look at what happened with the panic of '08. It was slow, then all of a sudden it escalated. That's what we're going to see again. Everybody that has a half a brain and that isn't a sellout or doesn't have their own agenda knows that this is a big Ponzi scheme. It was created by the federal banksters. What did it do? It drove up the equity markets. It did not raise the standard of living of people around the world, Greg. That's why you see the so-called, quote, populist movements popping up throughout Europe. And you could put the number into place. When you go back to 2000, those populist votes, they were about 8% in Europe. Today, they're 25%. Look what just happened in Sweden. Boop, they knocked the guy out. Look what just happened in Italy with the 5-star movement. and the League. Look what's going on in Germany with the AfD party. It's what I'm saying is, yes, going back to your question, there's going to be violence in the streets when the big crash happens, because people are fed up with the establishment. I mean, look at both parties. It's a freak show. And that's what the majority of the people feel. So they're disgusted with bailing out the banksters and the people getting nothing.
Yeah. Gerald Celente, tell us about your trends research, your publication, your newsletter. Tell us how much it costs. Where can we get it?
Well, you can get it online by going to trendsjournal.com, or trendsresearch.com. And I have to tell you, over a third of our subscription base is overseas.
Wow.
Yeah. And because the people want to know what's going on in the world. Oh, it's big news that somebody just bought Time Magazine. Oh, great. Time Magazine. Last week's news tomorrow. But the Trends Journal is tomorrow's news today. It's history before it happens.
Yeah.
As you well know from our forecasts. And it's only $129. We used to be a quarterly, Greg, since 1991. As of August, we are now a monthly.
Wow. Oh, that's right. We didn't cover that last time you were on. You're a monthly publication, so the deal's even better. You get even more stuff for the same amount of money.
Because the demand is so great. The people don't know where to go to get solid printed information. They go to USA Watchdog because they want to hear from other people that are not being paid by the prostitutes to put out the propaganda. And it's the same with us. People want information that they could use to help them avoid the dangers and seize the opportunities. That's why your show is successful, and that's why we're so successful.
Yes.
So, and it's a money-back guarantee. If you don't like it, you get your money back in 30 days, no big deal. You lost nothing. And by the way, we also do trend alerts each week, as you know, trends in the news broadcast Monday through Thursday, and information when events escalate, you get more.
Yeah, you're a busy guy, and invariably people will come on, and this is so stupid. Okay, this is a guy with a publication that writes this stuff down and then sends it out, and they'll say he's never right. They show me his track record. Delete. I mean, I'm sorry. Where do you go with that? I'm not saying you're perfect. You get some stuff wrong.
Of course
Everybody
not.
does. But you get you'd have like an 800 batting average if you were playing baseball. 900, I don't know. You'd be pretty up there. Because I know you. I've been knowing you since, I've been knowing you since 2008. Actually, before that, when you were going on at Fox, when they were still having you on mainstream TV. I knew of you. I thought, I like this Celente guy. He puts it out there. But anyway, Gerald Celente, publisher of the Trends Journal, thanks for telling us. The links will be in after the interview section. We'll put your subscription page up, and there's some free information on the main page, too. Gerald Celente, publisher of the Trends Journal. Great economic tutelage here from you, my friend. Very good. Even more in the Trends Journal. That's all you do, just skim at the top of it. I mean, you can't even get all this in a 30-minute interview. It's unbelievable. Gerald Celente, thanks for joining us today on USAWatchdog.com.
And thank you for having me on, Greg, and thank you for all that you do to keep the people informed.